Welcome, folks. This is a market review for Friday 15th. On Friday we had two setups that were valid, and they were based on the kill zones and the ICT Silver Bullet. So we had this inefficiency, and also we had 3 consecutive candles which are bullish order block. So during a London Open, we were just above here. We had not taken this high out at that time. So when price came down at around 4 inside the fair value gap, and also as you can see we had a clear sell side that was residing below these relative equal lows, plus we had this inefficiency, and we also had the bullish order blocks. So when price was moving down, we were anticipating for a run high to clear the buy side and also work inside this inefficiency. So we had this, and also we had as you can see we had an inversion fair value gap, as you can see right there. So price was to move from down here to clear the buy side liquidity. So this is in between the silver bullet, and if you notice, we've been all through my videos, there are quite few, but all through my videos we've been going through the same thing every day. So it's the same thing that we keep on doing, repeating itself until you get a grasp of what you'll be doing daily. So this is only to help you through that. So we had that run high, which was the silver bullet, and then we had the run lower to check out these lows, and also we're anticipating for this low to be taken and working inside these imbalance. So we're going to dive into this business from here to here and see how we could have framed the entries. Now from here we had this inefficiency, as you can see we had this inefficiency, so that one could act as an inversion fair value gap. So we were anticipating even for a run above this high, and this line denotes a daily high, which is a high to the left. So let's go into a 1 minute chart, and then we see how we could have framed those entries. So the video has been it has been quite some time since I released any videos, but now here we are. Yeah, so this is Friday, and it was okay for you to trade this run down, but this to me acted as a Judas swing to lure traders to wanting to go short and then reversing on them. So we had news that came out at 4:30, which is according to the New York local time. So anytime I mention about time, your time should be set to the New York local time every time. So we had a run high and then a sharp sell into the sell side. So we took the sell side, and then this was the time that the news was coming in, the news release. So it could be going long. So this was only to get traders out. For traders who were short from here and they could have traded their stops above this high, they were taken out right there, and then the market reversed to taking out the sell side and once again inside the fair value gap. So from here you could have gone long aiming for this high and eventually these highs, as you can see. So we had quite a number of highs which were quite relative. So that was the business of the London Open kill zone. So if you were to go long around that, would have gone long, your stop could have been very nimble, very small. So your stop should be below that low, because we anticipate for a run higher. And also, as you can see, we have this is a breaker. As you can see, we have low, high, lower, low. So you can take this, the most up close candle, extend it through, and then wait for price to come back into the range. So it might not fill in these gaps, and reason as to why sometimes gaps never tend to fill, and sometimes the price comes to fill in the gaps, is because we have maybe a breaker like this. Now, as you can see, we have low, high, lower, low. So there is no need for price again to come down here, and again time here now becomes a factor. So anytime you are trading within the silver bullet, it becomes easy for you. It becomes very easy. So for you to frame entries down here and taking partials maybe above this high, trailing your stop, and also we had other highs that were taken out. So we had quite a good run on that day. So we had that. This was approximately a trade that would have yielded a good how many R? It was around 11.95 R. So that was it. So we had this is also a breaker on the 15-minute. So we were anticipating for longs from the breaker to taking out the other high. So but we did not get that. So during at around 5, price started coming down, and it went even below these lows. So essentially, as you all know, and maybe some of you don't know, London usually creates the high of the day and or the low of the day. So it depends. London can create either the high of the day or the low of the day. It depends whether the day is bullish or the day is bearish. Now it all depends. But basically it's the same thing. It creates the high of the day or the low of the day. So London here had created the high of the day. So New York will create the low of the day, as you can see. So that was during the London Open kill zone, and then now we had a setup from 7. Now we had 7, yeah, around there. So we could have framed some entries to the downside, but we did not take this trade. So that's it for Friday 15th. I guess that was it for the market review. So we had one trade to the upside. You could have also short the market from above and anticipating for a run below these lows and eventually taking out all this liquidity. So that's it, and until I see you next time, be safe.